Silver is often called poor man's gold. So a lot of people who can't afford to buy gold will buy silver. So we will see a mass market going into silver and a speculation which will be even bigger than the Hunt brothers in the late 1970s.
Ladies and gentlemen, my goodness, the time flies, as I most of the time say. And there is Egon von Greyerz. Welcome, Egon. Great to see you again. We are still here, luckily, to discuss some interesting topics. There are movements in the precious metals markets and the geopolitical situation we know as it is. Let's discuss today those new movements and, of course, the markets. Good to have you again.
Yeah, and always good to speak to you. And every week, every month now is going to become more and more interesting from our point of view, and a lot more difficult for the world. We have to talk about how to help people because this is going to not be easy to survive the economic, financial, and geopolitical program that the world has for us.
That's true, Egon. Jackson Hole, this meeting in the US, everybody talked about that, and it seems it goes into the direction that we were expecting. But let me show first some price increases in the USA because they still continue. I have here the CPI and the PPI. CPI plus 2.7% in July, PPI 0.9% in July, higher than expected. I would say, Egon, nothing that would justify a rate cut, but nevertheless, I think the Americans will get one or even more. That speaks for our stagflation scenario. What do you think?
Yeah, well, for me, since 2021, when the long-term fall in interest rates bottomed, I've been very clear that we are now starting certainly a 20, 30-year cycle up of interest rates, higher inflation, higher interest rates, and of course falling currencies and rising precious metals. If they decrease their short-term rates for a while, once or twice, it has no significance. The long-term rates are telling us what is happening in the market, and it's much more difficult to control the long-term rates. And they're going up, and they are going to, I've said that for a long, long time, 10, 15 years at least, that the long rates will pull up the short rates because with the deficits, with the inflation we have, and with the money printing we have, it is not possible over time to control long-term rates or inflation. So we're going to see much higher rates, whatever the short-term moves are. We should not worry about that. The rates are in a long-term uptrend, and inflation also. And you can never print unlimited amounts of money and have zero inflation. It just doesn't add up. So yes, higher rates, and that's of course what very few governments can cope with the amount of borrowings they have and the amount of deficits they have, which are increasing the borrowings. So it's going to be, I think many government bonds will actually fail, and countries will default. They won't call it a default. They will just print more money and be automatic devaluations. But in effect, it will be a default because currencies have to go to zero, as we always expect in every monetary era.
Egon, I stay with this topic for a moment longer because Powell's statements, they caused, again, some kind of euphoria in the stock market at least. Everybody was happy. This total disconnect, I will show a little graphic in a moment. Here is an article from Reuters, and they write there that most analysts really expect that although inflation remains high, there will be a rate cut in September and maybe another one before year ends. As I just said it, Egon, the economy is completely decoupled from the stock market. We see the car sales or the cars are piling up, the house sales are dropping, the inventory increasing. So that is not a good mixture. And what do we still witness? This madness. I found this here, Egon, a very interesting graphic because it is a combination of several indicators, market indicators, and they all show us that we still are in very dangerous territory. relating to market valuation?
Well, Jan, I think what markets are in for a major turn, a long-term downturn in stock prices and stock valuations. Whether it starts like it often does in September and then accelerates in October, or it takes a little bit longer, it's irrelevant. To be in the stock market now is extremely high risk, and once this fall starts, it's going to lead to, in my view, at least what in relation to gold, it will probably be a 95% fall of stock markets, but also in absolute terms, it will probably at least a 75% fall of the stock market. So that we are looking at a massive wealth destruction taking place now. You think about stock markets falling, bond prices falling, and property prices falling. The rich will be much, much less richer in coming years, and they're not prepared for it. They are not prepared for the total fall in their net worth and in the value of their assets. And that's going to lead a totally different wealth distribution in the world.
That's true, Egon. I agree. And we see fleeing movements into the precious metals. Maybe fleeing is an exaggeration, but more and more countries and institutions see they have to do something. And I found here an example from India. India, a BRICS country, now they have to pay 50% tariff to Trump. By the way, another addition, although Trump is collecting huge sums, the deficit continues to grow, by the way. But now back to the Indians. They suggest, let me show the article, to hold 5 to 10% of pension assets in gold ETFs. Okay, ETFs, that's a different topic, and we discussed that several times. But they write here this range balances risk mitigation with growth potential, aligning with the long term horizon of pension liabilities. They use here ETF structures, but clearly, if those 5 to 10% of Indian pension money moves into gold, that will have an effect. And as we said it in the past, Egon, BRICS in general continue to move towards precious metals.
But you know, Jan, so we talk about India here, and of course they are, as a people on the whole, I mean, all Indians hold gold. And here we're looking at now institutional money also moving into gold because of the change of rules. The same is happening in China. China is now talking about first 1% for insurers into gold will be allowed, and that is most probably going to increase to 5%. And when these massive countries put major amounts of money into gold, we are going to see a massive demand that, as I have repeated many times, cannot be met by physical gold at today's prices. So, because there is not enough gold in the world to deliver to all of the buyers that are now going to look for gold. So the only way that they can get gold is to pay higher prices. And we are going to see, as I said many times, gold going up by multiples from here. I repeat, going up by multiples. The world doesn't realize that. And the gold has been now going sideways for, well, since April, really. Beginning of April, gold has been going sideways. The next move is imminent, in my view. Whether imminent is tomorrow or in a week or in a month, it's irrelevant. So we have now seen a consolidation of over 4 months, and the next move is very near. So that's why, as we've been saying since 2000, hold gold for wealth preservation. We went into it at $300, is now 3,500, and we're going to see gold going up to much, much higher levels. And now is the time, if you haven't got it already, to hold physical gold outside the banking system, obviously, because it is still today, even though the increase has been very high, Jan, for I said, over 10 times in the last 25 years, that's just the beginning, in my view. We're going to see a much, much higher gold price. And it's not because I'm a gold bull. It's only because the world's currencies are continuing their drop to zero, and that will be reflected obviously in the gold price.
Egon, this example from India shows us also that they got the message while the West still seems to sleep because our pension money, our insurances, they trust into government bonds. Good luck to them. But let me come to the second example, and that was especially for the silver community a real event. Saudi Arabia is buying SLV shares. Saudi central bank buys $40 million in SLV and silver miners. In total, the sum is not high, but I think an interesting message. Kitco writes here, late last week, some traders and analysts jumped on the news that Saudi central bank had entered the precious metals market. 13F filings with the SEC show the central bank bought 932,000 shares in the second quarter, value at 30 million and something. The central bank also purchased 203,700 shares of the Global X Silver Miners ETF. As part of their total assets, that's only a very small amount, Egon, but I think it's same as with India, a very clear message.
Yeah, and it's a trend. It's a trend, and we've been saying this now for a few years, you and I, and especially since the U.S. and therefore the EU always follows the U.S. whatever they say. The EU and the U.S. confiscated the Russian assets held in dollars around the world. Now, it is obvious that the Eastern banks and the BRICS central banks are not any longer going to hold dollars within the global monetary system or banking system or central banks. That's why we're going to see a gradual shift here from dollar assets as reserves for central banks into gold and silver. Now, people are starting to realize that silver is also incredibly important. And therefore, this is, as you say, a small move, but it's the trend that counts. They're moving into gold, they're going into silver. Silver market is very small and very low inventories, actually no inventories. There are always shortages normally. This is why, I mean, the silver price does not need much demand to go up substantially. Solar panels are having massive demand for silver. Now also in China, they're starting to manufacture solid state batteries for cars, which also requires a high silver quantity. So silver yarn is going to explode and go up many times faster than gold. And you're in industrial products that they use silver, it's such a small amount, so it's not going to increase the prices a lot, but it's going to increase the demand for silver. So yes, silver prices will go up substantially in the next few years.
And one important country is acknowledging, Egon, the importance of silver. Not just silver, they were hiding this in this USGS list, but let me show this. The report was that copper and another mineral were added to this list, and further down we could read silver was also added. The 2025 draft list includes 54 mineral commodities, of which 50 were included based on the results of the economic effect assessment. Zirconium was included because of the potential for a single point of failure within the domestic supply chain, and 3 were retained based on a quantitative evaluation. Potash, silicon, copper, silver, rhenium and lead were recommended for inclusion to the list, and arsenic and tellurium were recommended for removal. I think that's a pretty realistic assessment, Egon. You said it already. It's a critical mineral, and silver, we not only have the industrial use, we have the monetary use, and that will make the difference, and that is only beginning to develop.
Yes, remember that silver is more than 80 times less in price to gold. So silver is often called poor man's gold. So a lot of people who can't afford to buy gold will buy silver. So we will see a mass market going into silver, and a speculation which will be much even bigger than the Hunt brothers in the late 1970s and up to 1980 when silver went from virtually a couple of dollars to $50. Then, of course, it went down dramatically. This time we have an underlying industrial demand of a magnitude that the world has never seen before. So this is why silver will be going up for a much longer period and much faster than it did in the late 1980s. So silver will go up 2-3 times as fast, at least as gold. But remember, silver is very, very volatile. So holding just silver is, in our view, dangerous. You could maybe hold silver 25-30% of your total precious metals holdings, but hold gold also because it's much more stable than silver is. But the upside in silver, speculative upside, is enormous today.
Yes, you need good nerves for holding silver, but we have those, Egon.
Yeah.
I will close today with a very interesting graphic because we always, or from time to time, we get the question, my goodness, gold is so expensive, I cannot buy this now. Not really, if you compare it to the monetary basis. This is the graphic I mentioned. We see here, Egon, the monetary basis and gold were in line because we had a gold standard revaluation. Then a shoot up, gold was really overvalued. We clearly see it here in 1980. But since then, there is no overvaluation at all in comparison to the monetary basis, 100% or 40%. Although our viewers might have the impression that gold is expensive because the salaries are not keeping up, at least in relation to the monetary basis, it's not expensive.
Now, compared to money supply, monetary basis, whatever you compare it to, gold is extremely undervalued today, and we will see it overshooting. And of course, the monetary base, remember, or the money supply will grow exponentially in coming years because of the amount of money printing required to satisfy the deficit spending of most governments, especially Western governments. And that, of course, gold will follow. So, I mean, the gold is the only money that has survived in history. We emphasize that time and time again. And why is gold the only kind of money that has survived? Because it's the only money that's produced by nature. And therefore, it can't be manipulated, the physical gold side, and it can't be manufactured. And all other currencies are man-made, and gold, as I said, is nature's money. And this is why we will see gold as the only instrument that over time will maintain its purchasing power like it has done for thousands of years. More important than ever today, please hold some gold for your own protection and insurance and for your family or for your company or for your investment portfolio, and also hold some silver because you see tremendous potential there, but hold it outside the banking system in a safe jurisdiction, preferably outside the country where you live. It's very important so that you can actually reach your goal if a country wants to confiscate it in the country where you live.
I agree, Egon. Thank you for today. Hold your gold and silver, the advice to our audience. Thank you, and until next month. Thank you. Grüezi.
Thank you, Jan. Thank you very much.